Morning all. How are you all doing? Sorry, I'm late. I'm always late on a Thursday. Gym day today, so I've only just got back from the gym. So excuse the sweaty hair. I just chucked my t-shirt on. Sorry, you might find my t-shirt changes colour during the stream as I sweat through it. Wet hair Thursday, definitely. How are we doing? So I'm also still eating my breakfast. And getting over my cold. Right, let's crack on with news first. Morning, everybody. I won't go through the list today. Morning, everybody, going down the list. Anybody said anything else? New music makes me want to go to sleep. It's not new music. It's the same music. It's not new. That is the same music. You've probably been listening to it for a bit longer because I started the stream on the holding page for a bit longer this morning. So I was trying to scoff my breakfast down as fast as I could. Right. So yesterday we had FOMC meeting minutes. We'll go through that in a minute. Nothing particularly exciting there, I don't think. So only other news we had yesterday were the PMIs, which came out pretty much as expected. Ever so slight dip on the manufacturing prices. So there was a slight negative reaction on the US, nothing particularly exciting. So yeah, pretty boring on the news. What time do I go to the gym? 6:45 is my spin class, which finishes at 7:30, which means I have to leg it back from the gym, quickly eat something, and then get on stream. So I literally have 10 minutes from when I walk in the door before I go live. That's why I'm usually just like that. And the fact I've just finished a 45-minute cardio session, which takes me about 45 minutes to recover from. Anyway, so that was yesterday's news. We'll go through FOMC. The CPI for Germany comes out at some point today. So Germany releases its CPI in states. There's multiple states in Germany who release their figures during the day. There's 6 of them. So we don't get a time that the CPI comes out for Germany. We get a final figure at some point. But during the day, you will see the states are released one at a time. If they all start to have the similar trend, you can guess basically what the final CPI figure is going to be. This CPI figure is the second largest, or rather there's 2 basically. There's France and Germany. They make up 90% of the CPI, the inflation figure for Europe. So this is pretty much the CPI figure for Euro. This forecast to go up, which means we should get an uptick in the euro. If that comes out at anything less than a 0.2, we could see the euro dip faster today because they will drop interest rates quicker. So it's quite an important figure, that one today. So we'll see what happens with it. We've also got non-farm employment change at 1:15 today and unemployment claims at 1:30. That's pre-market, pre-New York. So we'll have some volatility potentially coming off of these numbers. Market's looking for any excuse to sell the US dollar at the moment. So if we get a negative figure on any of this, we could see a big down day on the US, but we'll see what happens later. So that's all the news for today. And obviously tomorrow is non-farm payroll. So quite often ahead of non-farm payroll, we get large movement in preparation for non-farm tomorrow. So quick recap of yesterday. I had a slight down day yesterday on the US indices, 0.5% drop. I managed to get out of the S&P yesterday. So we hedged on both the S&P and the NASDAQ yesterday. Pens disappeared. Those that were in the live room yesterday afternoon. So got hedged on it, unfortunately, just ahead of the news. I got out of the shorts as the market put a big reversal in down there, and then took an aggressive to get out. With a small profit on the S&P. NASDAQ couldn't exit the NASDAQ, so that ended up as a hedge loss. Just couldn't find an exit on it. I was toying with the idea of getting out at the same time as the S&P. If I had have done, I would have easily got out of it, but I didn't. So I didn't want to get out of this one as well as the S&P just in case they both collapsed. So couldn't really make much out of the US yesterday, but DAX and the FTSE selling off like a crazy beast ahead of the open. I'm not going to get a pre-market on that, I don't think. Oh, yeah, well. Yeah, I'll be taking the 5-minute that 5-minute candle as a pre-market today. Yeah, good day on the DAX yesterday. Nice profit for $600 or something. So yeah, good day on the DAX and the FTSE yesterday. So we'll see where these go at the open. We've got 30 seconds to go, and then we'll go and have a look at the FOMC stuff. Which is all back here. Ten seconds to the open. So pre-market range taken on both. Long on the FTSE. So FTSE TP1 is basically that high that we reached yesterday afternoon. There's 1 hour on the FTSE. It does break fast and hard, doesn't it, the FTSE, when it goes? It really does go. Quite like it when it does that. There we go. That's 2R. Yeah, it's too close to my TP. Taking that. Taking that off. Just in case. I hate it when it rallies really hard. Just misses your TP and stalls out. It does. It has hit TP now. But there's nothing worse than having a TP, price moving to there, and then going... Because it is the initial cash balance. This isn't directional movement. This is just literally a dump of orders going in. You've no idea if this is going to continue or it's going to completely reverse when the speculators come in. So DAX broken along as well. So a nice break on the FTSE this morning. Easy money. TP2 just within ADR, up inside this accumulation from last week. So we'll see if we can get a runner. Might hit it in the first 5-minute cash balance. That's 3R at the open. That's a phenomenal move. Crazy. I'll take it. So upside on the FTSE. I mean, there's so many levels that you could pick out that could end up as being resistance to the upside. It's just impossible to pick. So just a case of let that run with a trailer today. I'm running 2R trailer. So hopefully we just pull back 50% of that and leave a propulsion gap in play and then go up and run towards ADR. That'd be lovely. So looking at these indices, obviously, the FTSE has been much more orderly in its run when it's been rallying over the December period. So we've got, there's no huge rally that we've got a really good opportunity for a pullback on, unlike the DAX, which had that screaming December where we just did not stop. We literally pushed, went sideways, pushed, went sideways, pushed, and then we went into December, into Christmas. So there's a good possibility, I think, of a pullback on these, and the US indices are looking very, very, very much the same. So the FTSE is a little bit different to the rest of the indices, and the fact that it's been very orderly on its way up. So it's trading very different, but there's much more reason for a drop, I think, at the moment, but we'll see. So DAX is retesting pre-market highs. I'm not really able to get anywhere. We'll come back to that in a sec. Let's just have a recap of FOMC. Morning, Themba. So basically, obviously the meeting minutes, the FOMC meeting minutes last night were expected to be very similar to the last FOMC because there hasn't been any release of data between that FOMC and this FOMC where we've had anything really change. So there's not really any reason for them to release a statement any different much to what we had before. So the minutes we got here were very much along the same sorts of lines as previous. We froze, obviously, interest rates in December. We didn't get an interest rate change this time around either. So lower rates would be appropriate by the end of 2024. So as we know, we're looking to drop rates this year. At some point, we're going to start that rate drop, potentially up to 1.5%. Few participants suggested would face a trade-off between dual mandate goals in the period ahead. I don't know what that means. Number of participants highly uncertain around long restrictive policy. Observe the circumstances might warrant keeping policy rates at the current level longer than they currently anticipate. So some of the members basically just saying we don't want to drop that rate too fast. Wait for the data, wait for the CPI numbers to come out, the usual stuff. But as you can see, there's not an awful lot else that was said. So it's pretty much business as usual. We're expecting the rates to come down, probably the first drop sometime in the first quarter. So up to March, it could be March. We have been talking June, July as well. They were talking November. They brought it forward to summer. Now they've brought it forward potentially to spring. So it's very difficult to tell when we're going to get that first drop. But crux of it was no news, basically. So we didn't obviously get much movement last night. Other overnight news, we haven't really had anything at all. Kashida, mainly that's about the problems with the earthquake. That's it. So that's your overnight news. There isn't any, basically. Okay, 5-minute opening range is in. So there's your 5-minute ORB for the FTSE. That's very big. So if you didn't take the pre-market break, you're going to struggle to get a 2R out of that today because you'd be up at 150 ADR. So pre-market was the only thing really to take today, but that is still continuing to rally. DAX 5-minute ORB is in. That stopped basically at pre-market high. So nice break to the upside there. If you're taking the 5-minute ORB, you've just triggered long. That candle is 339. It's about 20% of ADR it's put in at the open. So very big, strong open again today. We've seen that all week. Virtually every index this week, every session has had a very nice, big, strong break. So it's a very good week this week, apart from the US indices yesterday because we had the news. But so watching the DAX, if you are long on the DAX, that pre-market break, obviously we're taking out that high. Once we've taken out that high, we're in this propulsion gap at the moment. So it looks like the buyers are running the sellers over in this propulsion move. So your next target is going to be pretty much ADR, which is that low. So we rallied down into that low. Buyers tried to buy the low up, got run over. So this is where the sellers started that sell move. So when the buyers rally back into that sell move, the sellers are going to trigger limit orders and we're going to find resistance. That's just shy of ADR today. So if we do get a run on today, TP1 will be easily hit. TP2 is just below that level. So what I'm going to do, I'm assuming obviously that we are going to rally and we are going to hit target. So I'm just going to move that down ever so slightly, my TP2, just so that it's got a bit of distance below that previous day's low, which is that area there that we hit. So we know there's limit orders triggered there. Buyers tried action. They've got run over, basically. So we then came back, retested that level, got run over again. So if we do break up, TP1 gets hit, and we do manage to get a run on, I want to get out before we get to that level because we're likely to get a drop back from there. There we go. So that's the DAX this morning. So let's see if we can hit that target. That'd be nice if we can get a double whammy today. So got $400 running on the FTSE, 130 banked, 140 banked already, 200 open. Another $600 morning, really, if I close it now. But I'm going to see if I can get that DAX hit. Nice and strong this morning. I got 1 minute 20 left on this candle. Somebody asked me the other day, actually, in Telegram, while I'm talking about candles. They astutely pointed out to me the fact that I talk in candlesticks and price has no relation to candlesticks, which is true because price is price. Candlesticks are our way of measuring movement over time. The fact that I'm saying we've got 1 minute to go until this candlestick closes has got absolutely nothing to do with anything. all I'm doing is saying there's a minute to go until that 5-minute candlestick closes. The market doesn't even know that candlestick exists. So it's quite interesting. I'm looking at this thinking, why am I waiting for this candlestick to close? Because we're certainly finding that we're running into a little bit of selling action here in this propulsion move. But yeah, I'm sitting here waiting for this candle. And it's a psychological thing when you're watching candlesticks. Somebody now trading the 10-minute chart is sitting there going, we've got 15 seconds to go until the first candlestick closes. Somebody trading the 15-minute chart is still watching that candle going, we've got 5 minutes to go until this candle closes. And they're looking to make a decision when the candle closes. But the candle closes on a time, doesn't it? And it is totally different for everybody. Price just moves. And it's interesting how I just suddenly caught myself saying that. It really doesn't matter whether I press the button now or I wait for the next 5-minute candlestick to close. I should be closing it when I'm happy with the money. So yeah, whoever said that to me in Telegram, how I say you shouldn't worry about candlesticks because all they are is a measurement over time and nothing to do with the market. It's just psychological, isn't it? We have to measure things. We've had this human need to measure things in blocks. I don't know why, but anyway. TP1 here, banked. So guaranteed profit today on both, nice and easy this morning. So out in 10 minutes, out in 5. So we'll get a pullback probably in a minute. Hopefully the pullback will just be back down to that pre-market high and we rally back up into TP2. Trading stops kicked in on both. So I'll just let those run and see what the market wants to give me. Right. Let's look at the FX market. So I closed out this morning. I put this in the Telegram group. I closed out Aussie dollar yen. So I closed out yesterday 2 other yens. I closed out the other yens that I was in. US, no, it wasn't US dollar yen. That was the day before. CAD yen. Yeah, closed out the CAD yen and another yen. CAD yen and pound yen. Oh, yeah, sorry, yeah. So I was looking at that thinking, I'm sure it was the pound yen. I switched on the pound yen, didn't I? So I got out the pound yen longs yesterday and I got out the CAD yen longs yesterday and I flipped short on the pound yen because we got an H1 RSI extension for the pound yen. So I took a first entry short there, hoping that we would come back down and test that propulsion gap. What we've actually done is what I said we would probably do in the first place, which was come up and retest that high. So hopefully we're going to get a pullback from here now, and we're just going to form some kind of nice range. Problem we've got with the yen pairs at the moment is obviously what's going on with these earthquakes, which are continuing. So at the moment, we've got a weak yen, and there's not really any news this week that's really given us any reason to have a strong yen at all. We haven't had anything out of Ueda or Kushida or anybody about interest rate rises. Obviously, they've got other things going on with the earthquake and what's going on with that plane that crashed and everything. So it's all a bit quiet at the moment from the Japanese front, but I've got now pound yen and US dollar yen shorts on. So I decided to take off the Aussie dollar yen. Reason being, my target on this one was the middle of this propulsion gap. Yeah, we hit the propulsion gap and we rejected. Zoom in so you can see easier. So we came up. My target was pretty much there. We came up and I looked at it basically as we were rejecting that. So I closed it, and then obviously we've now started to drop back down. So what I didn't want to do was just let that profit go, because I was expecting that propulsion gap to shoot back down again. And we literally tapped it and immediately the sellers stepped in. We've retested it. The sellers have stepped back in. We've got bearish engulfing. So it does look like the sellers that drove price down from that level are re-adding again. So I'm out of that one. It might well continue to weaken this yen, and we might find ourselves in the same situation as we are with the pound yen. We're coming back up and retesting high resistance, but I don't know. So I'm out of that one. Banked a little bit on that. I'm banking very, very small, as you can see at the moment, very quickly. I just want to get money in the bank. It's a new year, and I just want to basically get the ball rolling and get some money banked. So I'm getting in and out very quick because I'm absolutely clueless as to direction for anything, because we've had basically 2 weeks over Christmas where the market has just basically done nothing. So everything is reset. Everything could go any direction. And we're just waiting for that first clue of an interest rate drop for something to start a move, and then obviously we're going to get some big moves started in the market. So I just want to be in and out as quick as possible at the moment. New position taken yesterday on Euro Pound. First entry, H1 RSI extension, 5-minute reverse alert was in there. So that was first entry taken on that one. Target I've just set up at sort of 125, 150 ADR range. So basically this accumulation that we broke down through that tiny little propulsion gap there is what I'm aiming for to the upside. But obviously if we get a move up, I'll look at the portfolio and say, right, well, I might as well just close that one out with that one and bank 0.5% or something. I don't know. We'll just wait and see what happens. But at the moment, I'm just targeting a move up back into retest this accumulation. But obviously that is Christmas, New Year trading. It's just the market sitting holding sideways. So whether this is actually a move or not, no idea. So we'll just wait and see how everything sort of unfolds and develops. At the moment, we've got a nice push going on the euro. Yeah, euro nice and strong this morning. So that DAX might be under pressure. Yeah, DAX is starting to get under pressure a little bit. Not too bad. So we got this. Obviously, this is the initial cash balance this morning. Then we've got the second run afterwards. So this whole area here basically is the propulsion move at the open. So we'll be looking for the bias to add back in somewhere in here if we are going to rally back up into those highs. But obviously you need to be aware of, obviously we're on 2 down days now after basically a 30-day rally. So I wouldn't be surprised at all if we put another down day in today. But go with momentum, give it the benefit of the doubt. So today we got 2 ADRs to look at this morning. Euro New Zealand. So that's just basically a spike down into ADR, already rejected. So you've missed that already. If you weren't on that in the last hour, you've missed it. There's your 5-minute reversal alert. Just gone in off of ADR. So that's actually only triggered in the last 20 minutes or so. And that's off. So there's your hit to ADR, rejection, and off we go. Target on that one, you'd be looking somewhere in the region of that propulsion gap, which is 35. 54 is half an ADR. It's because of the speed of that movement within that hour. It's not the greatest. There's no upside potential in it, really, is there? We are in the range, though, and we have just rejected this low. So this low where we bought out of last 3 times, same thing. So potentially you're looking up here somewhere as a target, 125 ADR. So there is a lot of upside. If it's going to stay in a range, there's plenty. If it's not going to stay in a range, you're going to need to scale in. So nice ADR hit on that one, but obviously it's gone already. So you kind of missed that one. New Zealand dollar yen, straight into ADR, rejected, 3 wicks, pushed up, sellers hit them, pushed up, sellers hit them, pushed up, sellers hit them, and took control. So your reverse alert is in there on 5-minute. There's your breaking structure. You would have had one. You would have just about had a reversal alert there. Just. So that would have been your entry. And then it came up and invalidated that high. That would have given you a second reversal alert. Then it came up and invalidated that high. And then, as you can see, that's the next reversal alert. So you've had a reversal alert there, and there this morning. There's been 3 during that accumulation up at the highs. And it's pushing up a little bit again. So hopefully that is obviously, because it's a stronger push, we've broken down below that low. We should be looking for some sells out of that level if it's going to pull back down from there. But obviously we know this yen is very, very weak at the moment. So you could well push up and retest this double top, which is the previous week's high and last week's high. So if you get in here and it doesn't work, you could scale in again there. It's not very far. It's not even half an ADR, but you know, if you get in there and you want to take a second there, your average is going to be there. You're only looking for a push back down into this propulsion gap to get out with a nice profit, aren't you? So first entry, second entry, and then scale out down there. But we are expecting this yen to drop at some point, or everything to drop against the yen at some point when we get some news about interest rates from the Japanese. And it will probably be a very quick, fast drop as well when we get the news. But I wouldn't put it past them just suddenly releasing the interest rate and not telling us, obviously on a planned interest rate. So the next rate release for Japan, we got CPI for Japan. That's the yearly. Next week. I don't know when the next rate announcement for Japan is. Oh, there we go. 23rd of January. So end of this month is the rate announcement. So I wouldn't be surprised if we have little news up until then and they suddenly just go zero and they just basically do it without telling us. So we'll probably find a lot of volatility comes in this month, towards the end of this month, ahead of that rate announcement, but we'll see. Right. Propulsion gaps held on the FTSE, and that propulsion gap that we had there is being bought back again. So if we get a nice bullish candle here on the DAX, it looks like we might get a run on. So we've still got buyers on board at the minute. That is your ADRs. As I say, there's only the two today so far. RSIs, we had a few RSI extensions yesterday, as you can see. So I got into the euro pound and I got into the US dollar yen. So today's RSIs at the moment, we've just got New Zealand dollar yen, which is, again, just extended above the 70 level. You know, if this does get another push up into that resistance and we can get an RSI extension there, I'll be getting in short there, definitely. So that would be a nice triple top bounce. And if that doesn't pull back from here and it just does that, we've got that entire day's move up to 150 ADR, basically, which they will pull back and profit take on a percentage of that. Possibly even looking at yesterday's move as well as today's move as one leg, and then a nice 50% retracement on it before we try and go higher, if we're going to do that. But more likely the market's going to want to sit here sideways until we get that rate announcement. So nobody's really going to want to sell the yen this month in any volume when we've got the potential of a rate increase coming. So it's more likely the market will sit here in a holding pattern waiting for that end of January interest rate release to be announced. So what will happen is everything against the yen will be driven by the other currency. So if the New Zealand dollar weakens dramatically, this will fly up. If the New Zealand dollar strengthens, dramatically, this will fly up. If the New Zealand dollar weakens dramatically, this will go down. But it won't be because of the yen, it will be because of the cross. So when you're looking at all these pairs against the yen, you can consider the yen to be neutral. And basically whatever happens to the US dollar decides where this one goes. So you could have the pound yen coming down hard and the US dollar rallying hard, because the US dollar is rallying and the pound is dropping. The yen is not influential in it at all. So that's probably what will happen, because we're not going to want to dive into the yen in any shape or form unless something changes worldwide, obviously. So so that's your only extension on the hourly. Euro US dollar, we've got 4-hour RSI extension. Two positions on this one at the moment. Target is back in that propulsion gap. That is extended on the 4-hour. That's just coming out, so that's going to turn off in the next 4-hour candle close. We'll be looking for a push back up on this leg. So it's either going to push up and then find sellers and make a new leg down, or this is the market structure pullback on that leg, and we're going to go up. One or the other. We've got no directional bias yet on the pound, on the US dollar either, because we didn't really get anything yesterday that gave us any bullish or bearish stance on the US. So we're just sitting there waiting at the minute, aren't we? So we'll see what happens with the unemployment claims today. If the unemployment claims go up, we'll get a drop in that US. If the non-farm employment change comes down, we'll get a drop in that US. So we've got two figures that could well influence US dollar movement today. But these are kind of the sub figures to unemployment rate. That is what everybody's waiting for. That is the key fundamental driver. That's one of the top 5 drivers for fundamentals for interest rates. So the unemployment rate is very, very, very important. If that unemployment rate ticks up it will put much more pressure on reducing interest rates. And again, it'll be a case of dropping that US dollar faster. So if unemployment rate goes up, US dollar will come down. So this is what everybody's waiting for tomorrow to see what happens there. Same with the Canadian dollar tomorrow. Obviously, they're forecasting their unemployment to go up, which again puts pressure on reducing interest rates. Both of them are forecast to go up. So we should, if we get those forecast figures, probably see a decline in both of those tomorrow. We'll wait and see what happens. Market's just holding at the moment, not really going anywhere. So positions that I'm in at the minute, obviously those are everything closed so far. Euro pound, first entry yesterday, looking to push up into somewhere in that accumulation. Euro US dollar, 2 positions on that one. So second entry taken yesterday, first entry was taken up there on the drop on Tuesday. So average is there, in profit, looking for a propulsion gap retest. Obviously we could be up there, but not that greedy. Pound yen, first short taken on that one yesterday, H1 RSI extension, reversal alert. We're tapping into resistance at the moment. Looks like it's going to break as well. So next stop on this is going to be that weekly high, which is about 175 ADR. So if that does push up to there, probably be in third position by the time we get up there. And if we do get up there, like that, we'll be looking for the usual 50% retracement-ish on it. And US dollar yen, first entry on that one, again, 175 ADR today is resistance. Unlikely we're going to get any news that's going to move it that far today. Again, the market's probably going to want to wait and see what that unemployment rate is. This is the first proper news tomorrow that is going to, the first news that is, right, how's this going to affect interest rates? So this is what we're really waiting for this week. But don't forget that CPI for Germany is coming out today as well. So keep your eyes on financial juice today, because it's not a release time, but you will find they'll drip feed the German CPI states through financial juice. So if we get the first one coming out as a negative, then the second one comes out as a negative, it's probably going to be a negative, isn't it? So you'll see the market gradually start to move as those CPI numbers are released. But we'll wait and see. So that's it on FX. Unless anybody's got any pairs they want to look at specifically, there's not really a lot else to look at today. There's no setups anywhere. FTSE just about to stop out on second position. There we go, $266. DAX is still running though, so might get a nice push out the DAX. Second position profit on that is 390, so that would take me up to 560, 600, 700, $800 odd dollars, which would be nice if I can hit TP2 on the DAX. Good week so far. Profitable every day, which is always nice. Right, has anybody got any other pairs they want to look at all, or anything else they want to discuss? It's all very quiet in chat today, isn't it? Everybody's just either asleep or intently sitting there just making money. It's always very quiet when people are making money, I always find. Telegram group goes silent when everything's going well. When everything's going badly, it's very noisy, which is the norm. How am I getting on with the new EA? I've done some back testing on it. So I'm not looking to produce profitable back tests. I'm just robustness testing at the moment to try and find the optimal settings. So I'm just trying to figure out what I want to start with. So I'm just looking for a kind of average that everything seems to work okay around, and then I can fine tune it from there. So hedge distance of half an ADR to 3/4 of an ADR performs better there. half an ADR to a quarter of an ADR performs better there. 3/4 of an ADR is by far the best there. And on that one, it was, I think it was 0.75. So it seems to be give it more room to breathe. It's basically, also, this is what I'm looking for. This is what robustness testing is all about. It's trying to find what's roughly the best thing to do, because it's going to be different all the time. But most of the time, do you want to have a really, really tight hedge, or do you want to have a fairly loose hedge? So that's what I'm testing basically at the minute. And I'm going to run another 6 tests this morning on different crosses, just to give me an idea what to start with. And then I can visually forward test with that. Yeah. And I'm going to manually manage the closures of positions to start with. So I'm just going to set the EA not to do anything with closing positions out. So when something is closed out in profit, I'm going to make a decision on what I close out, because I don't want to close out on the same instrument. I want to close out on the portfolio, which obviously this can't simulate. So I just want to see. It's more about looking at the number of trades. So that tells me that 86 and that 190, that tells me that this run got hedged more than that one did, because if there's more trades taken over a period of time, it means more of them were just running away and hitting target, because as soon as you hit target, it resets and then takes another trade. So if it's successful, you'll get higher trade numbers. If it's hedged more, you'll get lower trade numbers. So I'm analyzing it basically as what gives me the best number of trades, which I would suspect will probably be lower profits overall. But how much distance do I need to use to hedge those positions to get those profits? So it's like anything. When you're using ADR as a measurement, we know that price moves 58% of the time within ADR. So within 100% of its average daily range, 58% of the time the market is in there. So if you're going to go long on a move, you need to give it at least half to 3/4 of an ADR before you hedge that move, because we know it's going to do that 58% of the time. So the majority of the time, it's not going to break out of ADR, is it? Which means it's going to be in this range. So the tighter you set it, the more you're going to hedge. What I can't determine from any testing is whether it's better to have a tight hedge or not, because you don't know what the rest of your portfolio is doing. And this is where it's difficult when you're using, and this is where I had exactly the same problem when I was developing the position trading strategy. I was doing all these back tests and everything was coming out really nice and profitable, but not profitable enough. It wasn't enough to make a living. And then that one was good. And then that one was good. And then you come across one which would just be like, holy crap, that made a massive loss. But when you put them all together and you analyze all the results in a portfolio and you put them in strategy quant and see what the actual equity curve is, you realize that an individual instrument's result is irrelevant. Because if that's had a crap 6 months, that's had a crap 6 months, doesn't matter, does it? As long as the other 6 or 8 have had average months, they're going to outweigh that, and you come out with an overall profit. And you also don't know what you would have done on those days, because a back test just shows you what the automation would have done. As a human being, if there's $1,000 on the table, I'm having it. Yeah. But does that mean you would lose some of those runs which produce $2,000? Yes. So this back testing is only ever going to give you an idea. And that's what I use back testing for. Is it better to use a small hedge or a big hedge? Is it better to have your target distance as a small distance or a big distance? Is it better to close out more or less of the position which is hedged? Yeah, these are decisions where you can look through all of them and go, when you close out somewhere between 20 to 50%, it's always profitable. When you close out much bigger percentages, i.e. here you can see that there's nothing above 50%, we know that there's no point in closing out 60% of the trade or above, because it doesn't make a profit on any of them. Yeah. So I know that I should never close more than half of the other hedge. So that's a rule. How much of it you never know. So this is all I'm doing with it. Is just I want to get a rough idea based on there's loads of profit in it. I mean, it's generating some decent returns. And again, I'm not worried. I don't care about drawdown. It's irrelevant, isn't it? We're hedging. Drawdown doesn't matter. You're locking in an amount every time. You can't. Drawdown doesn't matter at all. It's all about, is it producing alpha? Yes, brilliant. All I'm interested in. So that's as far as I got yesterday because I was busy. But I'm hoping today to get that finished, and then I can stick it on the account tomorrow and start forward testing it. No money. The market is quiet. No, lots of money this morning. The market's hugely volatile this morning. I'm looking to get in. Come back from holiday. I only got the DEX in trading. What? Use the stock index hedge EA. You would have been in very nicely all week with lots of money. Had a lovely week. How's SIH doing today? Well, it's in front of you, Mumo. 260 banked there and 324 open P&L there at the moment. Clean breaks this morning. Again, we've had lovely clean breaks on the European indices this week. And the FTSE has just been a dream this week. I haven't had a losing trade on the FTSE this week, I don't think. Yeah, the FTSE's 100% this week. Look, I mean, that was Tuesday. Pre-market break, straight to TP. That was yesterday. Pre-market break, straight to TP. And I took off the second position manually because it looked, you can see why. Pushed up, rejected, pushed up, rejected. Pushed down, pushed up, rejected. Nah, we're not going anywhere. 20 minutes sideways, I'm off. So that was lovely. And today, yeah, clean break, TP1. We hit 3R, got taken out in the trailer. So tick, tick, tick from the FTSE this week. And the DAX this week, similar story. So hedged on Tuesday, just by literally that much. Hedged on Tuesday, just. So unfortunate, but it was literally a point. Straight up into target, 5R, aggressive exit, out, done. Yesterday, hedge. Again, news day. So we got hedged. Straight down, target, aggressive exit, out, done. So not as good on the DAX. And today, obviously, clean break today. So today we've got clean break, straight to target, and second runner. So if we can get a runner out of today, it'd be very good. And the US indices have been pretty much the same story this week as well, apart from yesterday. So yesterday I had a very small loss yesterday. But yeah, big week this week. All good. Do you think it's a good idea to set up pending sell orders scaling into the Dow? Anticipating a 1,000-point drop within the next 2 weeks? No. Why would you do that? What's the logic in that? Think about what you've just said. Do I think it's a good idea to predict the future and guess something might drop 1,000 points for no reason whatsoever? Why on earth would you do that? Why would you even think that? Why do you think it's going down in the next 2 weeks? If we get massive unemployment claim rises today, If the unemployment rate increases tomorrow, what's the US dollar going to do? Drop. What happens when the US dollar drops? The stock index rallies. Why would you sell the Dow in anticipation of an interest rate drop and unemployment rate increase, which will drop the US index, drop the US dollar and rally the index? Yes, it's had a rally for the entire month of December. Yes, it's due a pullback. Does it mean it's going to happen? No. What's the odds? 50-50. So you're basically anticipating a 50-50 outcome. Use a coin. Don't try and predict the future. Go with the momentum. Where's price going? Up. Buy it. Yeah. Just because something comes down for 2 days doesn't mean it's coming down. It means it's come down for 2 days. What's happening today has nothing to do with yesterday. It came down and it came down. Look at the Dow. Oh, yeah. Just because something, you know, I've said this many times in here before. A candlestick is a measurement of time. Okay, so it shows you what price did within that time period. How can that possibly affect the next candlestick? Yeah, so if you look at the Dow and what we've done on the Dow, we've rallied like a crazy beast. Yes, you'd think it might come down, but why can't it do that? Thought the 26 fib retracement. What's a 26 fib retracement? I've never even heard of a 26 fib retracement. There isn't a 26 retracement on the fib. Oh my God, that fib's awful. There's a 23, a 38, a 50, and a 61.8. Those are the standard retracements on Fibonacci. But yeah, I mean, it could do, yeah? So if you measure the move that we had from December, yeah, it could do. It could pull back into that nice propulsion gap, yeah? And that drop there, you would look at being somewhere in the region of 750 points. Yeah. Yeah, it could do that, but what you're doing is basically saying, I'm going to stick a pending sell order there and a pending sell order there and a pending sell order there and a pending sell order there in the hope that it will get down to here. What happens if it triggers that pending sell order and it doesn't make a new lower low? It makes a higher low and rallies. If you're putting a stop loss in place, there's absolutely nothing wrong with that strategy. But why not wait for some clues as to whether that's going to happen or not? There's no point in trying to predict the future. Look at yesterday. Huge down day. Yeah. Look at any day, right? There's all these days where we had like 1, 2, 3, 4, 5, 6, 7, 8 days of rallying, 9 days of rallying. Then we had a big down day and everyone went, hey, this is the start of the drop. No, it's not. That day there, that was a down day, has nothing to do with the following day at all. The fact that this has rallied for weeks on end has nothing to do with whether it's going to come down or it's going to go up. It will go up or down depending on whether people buy or sell stocks in this sector. That's all that matters. Yes, you would normally get an extended point where you would find stocks are overpriced, and yes, it would normally pull back. But there's no point in trying to grid trade us. If that's basically grid trading, you're saying, I think it's going to come down, so therefore I'm just going to pile in. It's just gambling. Just not for me. I mean, I don't see any point. I can see the point in selling underneath that low, and if we are going to start a drop, trigger an order with maybe a stop loss above the high of that candle. And then when that candle closes and pulls back a bit, put another sell order there and add another position when you get confirmation. Yeah. But what you're doing is you're averaging into the trade as it comes down. And then if it pulls back, you're just going to go into drawdown on it. If you're adding a grid of orders, what you should do, the best way to scale into a position is if you went long there on that bullish engulfing, for example, you wait for a pullback and you get in there. You don't get in there. You wait for it to pull back and you trail. It's exactly the same way as my new EA for the hedging strategy works. Yeah, if price is pushing up, it drags the order and then pop gets in when price comes down. So you trail with it. Yeah, you trail the pullback. That's the best way to scale in if you're trend trading, which is basically what you're saying. But adding a grid, all that's going to happen is you're going to trigger order 1, order 2, order 3, order 4. By the time you get to order 4, your average is going to be there. A 50% retracement gets you back to break even. You'll crap yourself. You'll get out of the position with break even and you'll lose all that profit. Just doesn't work. And where do you stop putting your grid? How far do you go? It could go to the 23, could come to the 38, could come to the 50, could come to the 61.8. Just trying to predict the future. It's the crystal ball. You can't predict the future. There's no point in trying. John Wick tried. What happened to him? Although he's still alive, isn't he, really? But up to you. But not my strategy. I wouldn't do that. Still running on the DAX. FTSE's sort of trying to run. But we'll see if we can get there. That'd be nice. Right, that's all I've got for you this morning. I'll be back at 2:20 this afternoon for the New York session. Back tomorrow morning, obviously, for the DAX as well. Obviously, big news today, so be careful this afternoon if you're in any trades on the indices specifically. 115 and 130, you're going to get a lot of volatility come around. And we'll have a look at the US indices this afternoon. If there's been a massive move, I may not trade them, but we'll see. We'll see what movement we get out of the news this afternoon. So I'll be back at 2:20, and obviously then we'll look at trading the US indices off the back of that. Forex not really doing an awful lot today. Nice 3-bar reversals starting to go in on the DAX. Look. Might be a start of a pullback. So yeah, not a lot happening on the Forex at the moment. So just keep your eyes peeled on those. But I'm just going to manage these positions. Anything that gets to any decent money, I should be banking. So, do you trade manually after you get market structure reverse alerts? I don't know because I use the EA. The EA does it all for me. But you can do, yeah. Yeah, everything I teach in the bootcamp uses the market reversal alerts indicator and position trading, basically. So I used to trade manually. Then I developed the EA to trade the reversals for me. So all these trades are taken by the EA running on the VPS. So. But they do exactly what you would do if you were doing it manually. When it gets a reversal alert, H1 RSI extension, when you get a 5-minute reversal alert, it trades and it scales in 3/4 of an ADR apart as a minimum when the next reversal alert happens. So it does exactly what I teach in the bootcamp, which is why I built it, so that I don't have to do it. But if you don't have the EA, do it manually. And again, like I say in the bootcamp, you don't have to use any of the strategies that I show. Position trading is a methodology. It will work with any indicator. Yeah. Position trading is scaling into the market on market extensions. So if you want to use the Bollinger Bands, you want to use the CCI, you want to use the MACD, you want to use whatever you want. If you want to use, instead of the market reverse alerts as a signal indicator, you want to use an EMA cross or a parabolic SAR cross or a Bollinger Band extension on a lower time frame. Use whatever the hell you like. It doesn't matter. When you get into the market, the odds of the market going your way are 50-50. I have no idea if it's going to work. Any indicator will give you an extended reading as a condition, and any signal indicator will give you a reason to get in. You can use any indicator combinations you like. But position trading as a methodology is the fact of removing the stop loss and scaling into the position slowly. So you can use anything you like. I just give you what I use because I've tried everything and this is what I found works best for me. But other people use different things and works exactly the same. It's a way of scaling into market movement. It's a way of minimizing losses. It's not about indicators. It's about using indicators and a strategy to extract money. Reason I asked because I heard you saying you exited manually. Yeah, so I exit my trades manually. Yeah, so the EA, basically, the EA runs on the VPS. Yeah, so I'll show you my EA setup. So the EA runs on this account. So the EA runs on the VPS. Where? There. Yeah. So pull that down. So you can see these are all the charts with the market reversal alerts EA running. So what the EA is doing is it's basically getting me in with 0.1% risk on half an ADR of movement. Yeah, so every time there's a reverse alert on the 5-minute time frame, when the H1 RSI is extended beyond 75 or 25, it literally takes a trade. Yeah, no stop loss, just gets in on that reverse alert. It doesn't set a target. So basically, I have mine set up to automatically scale me into positions when we've gone 3/4 of an ADR into drawdown on the next reverse alert using a lot multiplier of 1.3. I am doing manual drawdown control. This can do the drawdown control for you. And I'm doing manual targeting. Yeah. So you can see there's no targets here. Everything's set to 0. So basically, the EA monitors the H1 RSI. When that is extended, it on M5, it goes, get me in. If that trade works, I get out myself. So I set the target. So like I said on that euro pound one today, or haven't set a target on it. Yeah. So the EA took the trade, and the EA will scale into the position for me automatically, so I don't have to worry about it. I manually set the targets. You can have it set the targets for you, and the set files I initially released all have that in there. So they all get you out with half an ADR, but this is discretionary. Yeah. So what I am doing is saying, right, I get in here. There's no point in getting out at half an ADR because there's a propulsion gap there. So if we push up through that propulsion gap, there's more chance we're going to hit that. So I'm going to use that as a target. Yeah. So I use propulsion gaps for targets on all my trades, or support and resistance levels that I can see. So all I will do is, if let's say, for example, this drops down to here and we get a reversal alert today. Yeah. So if we've got a reversal alert there today, the EA will take a second position. My average will drop down to there. So I'll have one trade here, one trade here. My average will be here somewhere. And basically, I will then place the TP for that trade there, and I will move that one down to there, and that will become my target. So as I scale into the positions, I adjust the targets down with the average. So when you're position trading, you get in and you hope it goes up. In this case, if it doesn't go up, it goes down. I take another position. I move my price, my average down. So therefore, I move my target down, because to get out, I'm still looking for a movement to the upside, but that's going to be a lot harder to reach now because we're down here. So let's try and get here. And if that doesn't work, it comes down to here. I take another position. My average moves down. I put the TPs now down here somewhere. The TPs are always above the average price, because that's how we make a profit. Obviously, we need to get out when we're above price. But I'm not going to set a target on the US dollar yen. Look at where my target is. It's not there because of a measurement in distance. It's there because there's a whacking great propulsion gap. Yeah. So I'm hoping that this is just going to come down to here. Now, if it doesn't and it pushes up further, we're probably going to hit that level, aren't we? So that movement there is from my entry up to that resistance is 209 pips. That's about 175% of ADR. I'm scaling in at 75% of ADR. So I can take an entry there. When it pushes up, let's say it hits ADR today and gives a reverse alert, I'll have a second there. My average moves up to there. If that doesn't work out and it moves up and hits that resistance, as soon as I get a reverse alert when the limit orders trigger there, I'll have a third entry. My average will be up there. I'm not going to target this level now because my average is here now. Yeah. So I will move my target somewhere probably around here for a 50% retracement on that move. Yeah, this is what position trading is. You're scaling in to the bank's move. Banks move the market and then they profit take the move. They move the market, they profit take the move. They move the market, they profit take. That's what causes market structure. Yeah, it's the banks push and pull, add, profit take, add, profit take. So we are getting in on that push. I'm expecting a pull. Didn't get it? Okay, I'll wait for the next pull. Didn't get it? I'll wait for the next pull. You will get a pull because the banks have got to make money. That's what position trading is. You don't know when that's going to happen, but this is why we use RSI, because it tells us that the relative strength of the instrument is beyond the norm, which means that they've pushed. What happens after a push? Pull. Yeah, that's what the EA is doing. It's basically monitoring push, entering, expecting a pull. The pull will be down to a level the banks moved from. Push, hit resistance, break resistance, propulsion gap, large bank order, retest bank order, push. That's what happens. This is what these propulsion gaps are. They're showing you where the bank's orders are. Pound yen weekly range just hit. Yeah. So these are large orders placed by the banks. Yeah, that is a large bank order. Bang, we pushed up and we rallied. Yeah, they never came back to this area. They will. They always do. That's what the propulsion gap indicator shows you, where the banks have been, where they've pushed from, all these grey lines. Yeah, bank orders that got retested. Yeah. They get retested all the time. And if they don't get retested, they get orphaned. There will be another one that will get retested. Yeah, and this is what it's all about, these propulsion moves. It's a big sell order. Yeah, and the market pushes away from it. They will come back and retest that. The people that made that order happen will add to that order. Yeah, and then it pushes down again. If it doesn't get back to that one, what will happen is it will push down away from it and come back to here somewhere, and then it will push down again and create a new propulsion gap. So if you're now down here and you were targeting there, move your target down to that one because that one's likely to get hit. If that one doesn't get hit and they push down further, they'll make a new propulsion gap. So you move your target down now into that one. So all you're doing is you're adjusting your target down above your average price. So your average price comes down, your target comes down, and you're just waiting for them to profit take. At some point they will. No idea when, which is why we use small scales of sizing, because if you're getting too big, you're going to get hurt. Your drawdown is going to be huge. So you use small lot sizing. That's all it is. We're riding the bank wave. That's it. But because no one can predict the future and no one can predict the bank movement, there's no point in using a stop loss to say, if it goes below there, I'm wrong, take my money. Don't. Just wait. Add in again, because you know the banks are going to do it. It dropped all the way down to there. So if you'd got in long on that double bottom and put a stop loss there, you got stopped out. What you should have done is waited for some buying action and got in again and moved your price to there, hoping that they would then pull up and retest that level. They didn't. They pushed all the way down. So you just get in again and you wait for that. Then you get out on that order, and that order. Yeah. Using a stop loss is just going to hemorrhage cash. So that's all the EA does. It just literally waits for a condition, extension, a signal, reversal alert, and hope. That's all you can do because you don't know which way price is going. So all you can do is hope that when you press the button, it goes the way you want it to, which is why I keep saying it's not important what your strategy is. It's important how you manage the strategy after the order has been taken. Yeah. You enter the market, you cross your fingers, you shut your eyes, and you hope it goes your way. If it doesn't, you manage it. If it does, you take the money. Yeah, all this stuff that's sitting in my P&L is nothing clever about it. All that's happened is an RSI has got extended, and I've just happened to get on the bank's profit take move. I've put it in there. These ones I've got on, and the banks haven't taken profit yet. So I'm still in with the banks because I am in the bank's move, aren't I? That's what I'm doing. The banks have moved up, so I'm in waiting for them to take the profit. When are they doing that? I don't know. But I can manage that position. Look at this euro US dollar. Since we've been on air, that has been red and green and red and green. Right now, I can just stick that down there and go, oh, this is annoying me, the euro US dollar. Have I lost anything? No. 2 days. That's what I've lost. So I got into it on Tuesday and I'm still in it. That's what I've lost. Entered there. Didn't work out. Entered there. Working out. Shall I take it? Want to? But this is all fully automated with the EA. This is what the EA does. It just literally takes all these orders because I can't be bothered to sit here because I'm lazy and wait for this to go ping. RSI's extended. Okay, thanks for letting me know on the New Zealand dollar yen. I'll now sit here on the 5-minute chart and I will wait for a reversal alert. That's what you do if you're trading manually. That when that lights up, you go to the 5-minute time frame and you sit there and you wait for the sellers to come on board. You could be waiting all day. Does it not make sense to automate that part of your life? And the only part of your life you need to worry about is where shall I take the money? That's all I do. Just simply you're automating the crap. Every job has got a bad bit, hasn't it? It doesn't matter what you do. If you work in McDonald's, if you're working as a doctor, if you're a pilot, there's a bad bit. Pilots have to sit there for an hour before they take off going, light on over there? Yeah. Cabin crew all here? Yeah. Engines working? Yeah. Do you think they enjoy that bit? They have to do it. But if they could automate that bit, do you think they would? Yes. My crap bit is sitting here waiting for that to light up and then me watching this thing and waiting for that orange thing to ping at my face. I've automated it. Yeah. But where it's going, I personally want to make that decision myself. If I'm short here, that is where I'm targeting because that's a previous resistance that they pushed through hard and had a propulsion move out of. It could do that. It could do that. I'm going to go for that. Yeah, so I will set that manually myself. But you can have the EA do that for you if you want to. But you are then going, I will pick something, half an ADR, 3/4 an ADR, 1.5 ADR. You've got to pick something, haven't you? Whereas I would rather target something I think is going to get achieved rather than something that I want the EA to achieve. If I set a target at 1 ADR, let's say we're getting short here, and I set a target at 1 ADR, price has to move all the way down to there for the EA to close that position. I can see 1, 2, 3 reasons before it gets there that the market will bounce. Does it not make more sense to go where you think the market will go rather than where you want the EA to go? Yeah, that's why I use the EA for semi-automation, and why I always say, even with the stock index hedge EA, yeah, use it to automate the difficult bit. Can you automatically calculate a lot size based on a range and make a decision based on a range and put those orders in that fast on all the instruments you want to trade? Or should you automate that process? When the market's gone that way, I will make a decision on whether I get out of the trade. I'm out of the DAX. There you go. So closed both $500 or so this morning. I use this EA to trade. You can use it full auto and it'll do everything for you. I use it to get me in. I'm going to make the decisions basically as to whether I take that money off based on how much money is on the table and whether I think price is coming away. And it's not the right thing to do, be long anymore. It isn't the right thing to do. But the EA today has got me out of that, and it's got me out of that. I could have, when I said, you heard me say it, there's a nice 3-bar reversal forming there. What's a 3-bar reversal? A push, pause, pull, reversal signal. Look what happened after that. I could have taken that off. That's my choice, discretionary as a trader. The EA automates the horrible bits of the job. As a trader, I need to be aware of what's going on in the market. So I need to be able to watch the market, which is why, I always say you can't have an EA where you can just basically stick it on a load of charts and go and sit on a beach somewhere and drink Mai Tais. It's not going to happen because you are the trader, not the EA. The EA is an automation tool. Self-driving cars, brilliant until they hit a wall. EA is brilliant until the market regime changes and that condition doesn't work anymore. You need to be aware of that. You've got to watch it. But yeah, that's the discretionary part. Yes, why? Are you in a trade? Yes. First day here. For discretionary trading, how did you gain the confidence to trust and act on what you see in the charts? I tend to get analysis paralysis. You never know. You never know, do you? One of my mentors said to me, you need 1,000 or 10,000 hours of chart time before you will get this. And I think he was right. The only way you will ever be comfortable with discretionary trading is after you have made the same sort of decision X number of times and seen the outcomes X number of times. And the outcomes will be positive or negative. And you will realize that it doesn't matter. What matters isn't whether or not I bank that $30 and it's the right decision or the wrong decision. It's whether you bank that $30 and this thing is green at the end of the day. It's a difficult thing to explain. Discretionary trading is all about feeling. This is why it's discretionary. Yeah, you give 10 traders the same chart and tell them to take a discretionary trade, you'll get 10 different trades. Yeah, even if someone's looking over someone's shoulder and it goes, that guy's just sold it, I'm going to sell it as well. They will exit at a different spot because your psychology tells you and scares you away. Like what I just said this morning, there's a nice 3-bar reversal forming there on the DAX. Some people would have seen that and got out. I didn't. It's a discretionary thing. There is no right or wrong. This is the thing you have to experience, which is why I say you can't make it. You can't just go from nowhere to 100 grand a year trader. You've got to put the hours in to watch this thing go up and down. The reason I make these indicators is because I have identified things that happen over and over again in the market. I have identified that when the RSI 21 gets extended, it tends to pull back from those levels. Yeah. So I use this indicator to tell me when that is likely to happen. There's a lot of times where that doesn't happen. On this particular chart, it just so happens that it's worked 100% of the time. These propulsion gaps are on the chart for a reason, because I've identified over years and years and years of watching these things go up and down that when there's a big propulsion gap, it gets tested again. Yeah. I've just seen it happen 1,000 times. So I create something to show me where the price is likely to go. Is it ever going to come back and fill that propulsion gap? I have no idea. That one, I have no idea. That one, I have no idea. But I know it's going to do that or that. And all discretionary trading is about is deciding whether you've got the confidence in it going there or there. You'd have no clue. So all you can do in trading is plan for all outcomes. And this is why you hear this. People say this all the time, don't you? Plan your trade and trade your plan. What I used to do was follow that religiously. I would plan my trade and then I would trade my plan, and my plan would fail. So I would hop onto a new system and then I would plan those trades and trade those plans, and then they would work for a bit and they would fail. What I realized was everything I was doing was correct at some point. I just had a market order there that told me to get out with a loss and then wait for my plan to succeed. And my plan revolved around market movement. It always has done. All you've got to do is go, right, there's a good chance either this or that will happen. When you make that decision, when that decision comes into your head, like on that DAX this morning, that 3-bar reversal, your decision isn't, should I get out there? Your decision is, am I happy with that? That amount of money there, am I happy with it? If I hadn't have taken that trade this morning, I probably would have exited that. Because I banked $250 there, I thought I'll give it the benefit of the doubt. Worst case scenario is I'm still going to make money. But my plan at that point was, where am I? I've banked that. I've banked that. What's the worst case scenario? I'm going to bank more money or much more money. That's the process, the decision-making process. Whenever you get a discretionary trade to take, whether it be an entry or an exit, as long as you've planned for what you're going to do next, you will have no problem taking the trade. Where you get analysis paralysis is where you go, right, this looks like it's an ADR reversal and it's going short, but it could go long. So plan for that. It's not a problem, is it? So I'm going to go short, and if it works out, I'm going to take profit. If it doesn't work out, I'm going to get short there. If that then accumulates and breaks through that level, I'm going to scale into the position up to there, and then I'm going to get out on that big long leg down. You should never have a problem taking that short if you've planned for the next few days worth of movement. If you're trading a 5-minute chart, you should plan for the next bounce or where your stop loss will go if you're using a stop loss based strategy. That's all you can do. But the crux of accepting discretionary trading and entering and exit discretionary and putting targets in place as discretionary is all about accepting the fact that you have no control over this market. It's going to go where it wants and you can do nothing about it. So therefore, just press the button, because whichever way you press the button, you're either going to be right or wrong. As long as you've got a backup plan for if you're wrong, you're fine. If you're right, it's going to be right. Just got to forget about it. So when I go, like with this, euro pound is a great example. I have no clue where this is going. Absolutely no clue. I've gone long. This is Christmas trading. There's a resistance there, which is far too close, and it's not even worth me taking the trade on. There's another resistance there. And then you've got this accumulation over Christmas period. Anywhere in there it could hit. So I've no idea where this is going to the upside. So I've just gone, that's about $100. Let's see if we can get there. I have no clue. But what I do know is, if it doesn't go there, I've got a plan. The EA, when it comes down and hits this area here, is going to take another entry for me. My entry will then be there, my average. Now, that resistance, if it comes and retests that, is fine. But that's me accepting I ain't got a clue. But what I do know is when the RSI gets extended, there's a good chance it's going to pull back. That's all I'm going on. Literally, it's simple. Like I keep saying, the simplest strategies in the world are the ones that works. If you flip a coin and press the buy and the sell button, that is as good as taking an RSI extension on the 21 on the first week of Christmas. The odds are the same. 50-50, isn't it? You've just got to let go of control. You are not in control. That's this video. This is on this position trading handbook that I put together. The very first video I asked you to watch is that. And it's the most important 10 minutes of your life. Because unless you accept that, you'll never make it in trading. Everything you do has got nothing you can do about it. Absolutely nothing you can do about any of it. When you press that button, it's either going to make money or lose money. If it loses money, you can get out. If it makes money, who cares? Done it. Job done. So you've just got to put the chart time in, unfortunately. And the best way to do that is go into the strategy tester, yeah? And press the button. And sit there. And watch it. And, you know, like I said, I got told that I needed 10,000 hours worth of chart time. what I didn't do was go, oh, Christ, I haven't got that long. I'll be dead by then. What I did do was go in here and sit here and watch this go up and down. And then suddenly realize, well, it just goes up and down. That's all I need to do is just wait for it to go up and down. So if it goes down, I just need to wait for it to go back up again. Look, it keeps going down. Probably going to go up now because it went down. Funny that. Weird. Who'd have thunk that? Why do I think that? Because it's just what it does all the time. It's all it does. It's all it does. All it does, literally. It just goes up and down, forming market structure. Either a trend or a reversal in a trend or a range. Three things, three conditions the market can have, isn't there? It's trending, ranging, or breaking out. Every single time it's mean reverting, regardless, isn't it? But all it does is it goes up. Look, it's pushing up now. In a minute, it's going to pull back down on a percentage of that move. Because that's what it does. And if it keeps going, the further it keeps going, the further that elastic band gets stretched, the faster that snapback's going to be. Just keep measuring that and wait for that pullback. All it does. But if you sit here and watch this in the strategy tester, you'll understand that this is where the discretionary part comes into it. Your discretion is, am I happy? It's not where I think it's going, what should I do, what shouldn't I do? It's, am I happy? Am I happy with the $40 I've got in profit on the euro US dollar at the moment? No. So I'm staying there. If you're happy with the $40, that's your discretion. It's not right, it's not wrong. I couldn't have got that much more accurate, could I? Yeah, and that's going down. So it's going to come down and it's going to hit this area here, probably. And then it's going to push back up again. I don't know if it's going to do that, but that's what I think would probably happen. And if it doesn't happen, it's going to come down, it's going to hit that area. And then it's going to push back up. Oh, look. Weird. Am I psychic? No. I've just said it 1,000 times over the last 15 years. That's how you build discretion, muscle memory. My eyeballs have got these things burnt into them. I go to sleep at night and I can see red and green because I've been watching it. There's nothing you can do but watch it. So if you sit here in the strategy tester and you watch this and do what I'm doing now, get Epic Pen, it's free. Sit here in the strategy tester. As it's going down, go, right, I think it's going to go up to here. And do that. And give yourself the confidence that you know where this thing's going. You do know where this thing's going. If it breaks through that level, it's probably going to hit that area there. But it might not. It might just come down and hit this area, and it's going to bounce from there somewhere. One of those things is going to happen with 90% certainty. I don't know which. Neither do you, neither do the banks. My line was a bit off, but yeah. It's just muscle memory. You just need to do it over and over and over again. Pilot can land a plane with his eyes closed if he's been through that airport 1,000 times, but not because he's a good pilot, because he's just got the muscle memory. This is what my indicators show you. My indicators show you that these things get hit all the time. So let's draw them on the chart. Where's it going if it goes down? Down there. Where's it going if it goes up? There. Just because that's what it's always done. Why is there support and resistance lines on there? Because when it gets to these lines, it normally reacts at them. Only because I know it does it. So that's what I put on the chart. I only put on the chart the stuff that I think it's going to go to. I have no idea which way or when, how long, whether it will, won't. But I always know that if that doesn't work, there's a plan further back there somewhere that will. And that's what trading is all about. It's about planning how to get in and out of the market. It's not about trying to get the entry correct. It's about being discretionary, adapting. It's all you can do. Nothing else. Because you can't see the future. I have no idea if the euro is going up today. No idea at all. I hope it does. I hope it goes up by 125% of ADR. But if it doesn't, I'll deal with it. Euro yen ADR. We've got some movement on the so was that Aussie yen? No, it was Yeah. So more movement to the upside on the euro. And you know that yen's weak again. But hopefully that answers the question. Probably not very easily, because I don't think there is an answer. You can't answer an unanswerable question. Because if you think about the definition of discretion, it's down to you. How can I teach you to be discretionary? It's down to you. If you really want to get rid of analysis paralysis, use that chart. Yeah. Use that chart there. Do you think you should go long or short from where you are now? Difficult question, isn't it? But if you were to stick something on the chart that told you, what's this, Euro Swiss, something happened over and over and over again, you would say probably long. Why? Because we know that these whacking great bits get tested. Now it makes more sense, doesn't it? Is it going to do it? I've got a clue. Neither of you. That's trading. That is the reality of it, isn't it? Does the EA still take trades once the retest arrow appears? If you want it to, yeah. If you said it's a trade on retests. Yeah, so in the settings, you can either say, I want to take initial reversal alerts, or you can say, I want to take reversal retests. So depending on which of those you set, if you set reversal retest, it will only trade on a retest. If you set initial reversal, it only trades on reversal alerts. It's up to you which you want to choose. Either or. Again, no wrong or right. The only thing I would say about retests is the market doesn't retest as much as it breaks clean. So when you look at reversal alerts, so this one retested. They all retested. That one didn't retest. Look, there's your reversal alert. It didn't actually come back and retest the reversal area. So if you took a retest, if you had your EA here set to take retests, you wouldn't have got into that trade. I would be in it on a reversal alert, but I wouldn't be in it on a retest because it didn't retest. Retests are confirmations, the M pattern. Yeah. So when you get a reversal alert, a retest is the second leg of the M. We don't always get that. Sometimes we get an A shape or a V shape, in which case we never get the retest, which means those reversal alerts would be profitable. If you took the retest, you wouldn't. So again, no right or wrong. I have no idea if something will or won't retest. It will or it won't. It depends on the strength of the market at the time. Razvan, I sold US dollar CAD last night at 12 o'clock. I woke up with $180 this morning. Good man. Use the A for all reversal. Only if the conditions are met. So I use RSI extensions. It's all covered in the bootcamp, Mick. If you want to go and watch the bootcamp, how I trade, H1M5 mean reversion is my main strategy. It's covered in, don't do this. Go and watch day 4, but it's all covered in day 4, which is, it's all covered in day 5. The strategies I use. But don't watch that without watching those, because if you watch that without watching those, you will have no idea what I'm doing or why I'm doing it. This is just the strategies. They will make no sense to you because you'll enter and you'll go, why am I doing this? Because you need to know this before you do that. So don't jump to the strategies. But... oh, look, we got a new spammer. Check Forex Alpha live stream for gold. His signals and analysis are very strong. Following him for 3 months. He is a new guy on YouTube and his analysis is super clean. If he's a new guy on YouTube, he hasn't got a f***ing clue what he's talking about. So please don't go and follow this idiot. Report. Unwanted commercial content. Goodbye. So is that the new Helpy FX, do we think? Helpy FX haven't been in the room for ages, have they? I miss Helpy FX. Their signals have got an unbelievable strike rate of 87.7776%. They're that accurate. How often does position trading work? 50% of the time it works every time. Exactly. Well, it's not, I don't know. This is the whole thing. This is the thing about, this is my light bulb moment of all light bulb moments was the control thing. Yeah. And I got this from my mentor who taught me about price action. He used a stop loss based strategy over and over and over and over and over again. And every time we got into a trade, I would say to him, what do you reckon the odds are of this one working? And he would always say 50-50. And I would be like, but why are you saying 50-50? Because you say you've got a strike rate of 60% or 62%. I can't remember what it was, but it was 60 something percent. So what's the odd? Why are the odds of 50-50? Surely it should be 60 something. He was like, no, because every time I press the button, it's either going to go up or down. And that was my light bulb moment. It was like, so you basically have got no clue, have you? So you're teaching me a strategy and you've got no clue if it works. And he said, yeah. That was my light bulb moment. It was like, well, if you don't know if that's going to work, what would you do afterwards? And he went, I would get in again the next time I get a signal. And that was but why not get out? Why not just get in down there? Because if that one doesn't work and that one doesn't work and you've got a 62% strike rate, surely the odds of that second one working are much higher. Position trading. But every single trade is 50-50. Always will be. Nothing else you can do. Do I trade prop firms? Not anymore. I did, and I made some nice money, but what I decided to do was get more of my own capital to trade. So I now trade with my own capital. My prop strategy was ORB and SIH. Well, basically, it's opening range breaks, basically. However you want to trade them, there's multiple ways. But this is the strategy that I was using on prop. And I was using a support resistance based strategy on the hourly time frame. But the problem with prop is obviously I would, as every trader does, have a losing streak, which means I lose my account. I have to reset myself to square one. So I decided to take 40k of my own money and put that into just doing it myself. If you can't, you need to use prop. If you haven't got the money, you need to use prop. But with prop comes a lot of restriction that you will find very hard to continue to trade with. The statistics show that less than 1% of people hold an account for more than 3 months. That should tell you everything you need to know about prop. These scammers, I was so stupid to subscribe to a signal on Signal Start, my FX book. And he promised not to violate 10% drawdown. Yesterday, he lost 80%. Don't follow signal services. This is why I don't have a signal service. People ask me all the time for a signal service. What if I go mad with all your money? This is why I would never be a PAM, or I'm accountable to me and me only. If I want to blow my account up, I'll blow my account up. But I'm not going to blow your account up. Don't ever follow signal services. Learn to trade. Yeah. Those signal services have got exactly the same odds as you have of getting it right. Yeah. When they press that button long, go short. What's the odds? 50%. Honestly, it doesn't matter, does it? Yeah. Pick any time frame, any chart right now. Flip a coin. If it's heads, go long. If it's tails, go short. Come back this afternoon and see if you made money. If you haven't made money, deal with it. If you have made money, bank it. What you got to do. Thanks for subscribing, Empowerment TV. Welcome aboard. Empowerment TV. Sounds like a good, strong channel. I'm still holding my US dollar CAD, looking for the rally towards December FOMC move. So again, here, whether that happens is going to be decided this afternoon by the unemployment figures, and if that doesn't decide, the unemployment rate tomorrow will. So you're holding at the moment nicely. You've got a support here now. That propulsion gap basically is your downside support. but it may never get there. Yeah. All down to fundamentals. That will happen today or tomorrow. And again, this is the discretionary part, isn't it? If you get back up to there today, and let's say, for example, it hits 125 ADR today, do you want to risk that or do you want to take that? I would have that in my bank account like that. We've got unemployment rate coming out tomorrow. The US dollar could put in a 225 ADR move and be back down here. Yeah, if you've got money, take it. I can spend this. I can pull this out now and I can spend this. I can't spend that. I can't spend that. I can't spend that. I can spend that. Like you said, it depends on how big your balls are. Yeah. It literally is that simple. This is where your discretion comes in. And this is why I say, are you happy with the amount of money you've got in your P&L? If yes, take it. If no, hold it. Don't blame me if holding it makes it disappear. Always think worst case scenario in trading, because 90% of the time, the worst case scenario happens, doesn't it? Yeah. Look at what I've done this week and look at where my positions are now. How often have you seen me sitting in 8 to 10% of drawdown? Pretty much every month, guaranteed. Sometime this month, I will be in 8 to 10% of drawdown. Always. That's my job, using my capital to risk on the market. Yeah. There's nothing you can do about it. So when you have an amount of money that you're happy with, use it. Yeah. I have a mortgage to pay. I have car payments to pay. I have holidays to buy. I have all sorts of stuff I need to spend my money on. That is no use to me whatsoever sitting in there. But when it goes down to there, it's a meal out on Friday. Discretion. All down to discretion. There is no full automation on anything. You decide. I can't decide whether you should get out of the US dollar CAD because I don't know whether it's going up or down. If I say get out now and it goes up, you'll be cross. If I say get out now and it goes down, you'll be happy, but only if you got out. Not my choice, it's your choice. You're the trader. What brokers do you use? Robo Forex. Here in the US, FIFO rules are awful. Yeah, I don't know about US. I use Robo Forex. So there's two Robo Forex websites. If you follow the link on my website here, my broker there, that takes you to roboforex.com. There is also another Robo Forex. I can't remember what it is, but you'll have to check out whether they take. I don't even know if they take US customers. You need to just check it out. But I use Robo Forex. They've got nice tight spreads, good market execution. They're a good broker, really good broker. They're big, they're huge. And they've got very tight spreads and good execution. That's all I'm interested in. I also use DOW&X. This is DOW&X I'm trading on here. This is DOW&X UK. But if you're going to use them, you're only going to get 1 to 30 leverage. There is no FIFO rule though. As you know, as you can see, I can hedge. But I don't know. You need to do that research yourself. Because I'm not in the US. I don't have that problem. If I do have that problem, I'll find a broker that doesn't have that problem. Morning, Shipcat. New follower. Like your info. Cool. Make sure you subscribe then. Here twice a day, every day. One last question. I noticed you use different lots for different pairs. What's your logic behind it? So the EA calculates the logic automatically for me. So all my risk is based on, for position trading, it's based on 0.1% risk per trade over half an ADR. So if I get in... So euro pound long there, basically. So half an ADR is 20, which is roughly there. So if I put a stop loss down there, at roughly 20, that's about $50 of risk. Yeah. On a different pair with a different base currency and a different ADR, you're going to have different lot sizing. So the EA calculates all that for you, so you don't have to worry about it. And again, that's another reason I use the EA. All EAs, all you should use EAs for is automation of mundane tasks, lot size calculations, entering on strategy rules, automating your drawdown control if you want that done for you. Anything that you struggle with as a trader, automate it. This is why I built all these dashboards. I want to know when things have hit ADR. I could have 28 pairs open and I could have an ADR indicator on every chart, or I could build a dashboard that monitors it and just pings me an alert every time it happens. Automation. So now I don't have to look at charts at all. I can be wherever I want to in the house, turn up the volume on my PC, and every time I hear a ping, I go upstairs and go, something's happened. There's an alert. And I don't even have to do that now because the EA will automatically get me in on the conditions that I set. So I say every time ADR extension gets above 125, wait for a reverse alert and go short, because that's one of my strategies. The EA does all of that for me. So I don't even have to monitor charts. It's all about automating yourself. What works, automate it. What doesn't work, okay. Nothing works, but nothing works with any sense. Look, Aussie Yens hit ADR. I don't have to be looking at the Aussie Yen chart. Now I can look at it and go, right, do I want to short this? Nice big rally, might pull back into that propulsion gap. I'll wait for a reverse alert. So drop down, M5, monitor it, wait for a reverse alert. There's my short. Be looking for a third to a half an ADR, something up to 40 pips. So it would need to come all the way down here to make it worthwhile taking a trade. But if that doesn't work, what am I going to do? Wait. So I go short on the next reversal alert. If it does that and pushes up, what's it going to do? Hit that propulsion gap or that resistance. Second entry, scale in, exit. Plan. All about planning. So if you're getting short now, set your target. There's two levels, one there, that propulsion gap, that propulsion gap. If that is close enough and profitable enough for you, take it. If you say, I need it here because I want to make X, put it there. If it works, forget about it. If it doesn't work, what are you going to do? Scale in twice and then wait for the market to pull back on that leg. Plan. All you got to do. But the entry, you don't have to do yourself. That is fully automated. The planning will only come into effect if the trade doesn't work. So I'm sitting here with my P&L with 4 positions on. 1, 2, 3 positions here that I'm sitting in at the moment are open. I don't have to plan what to do with them because the EA is automatically going to do that for me. And I don't have to worry about them. All I've got to do is every time a trade is taken is place a TP on the chart. Or not, or just wait. Don't have to use a TP. I just monitor this every 3 or 4 hours and see, well, that's in profit. I'll stick that down there. That. But my plan is there. Look, I'm going to go 50% of that propulsion gap, which is roughly ADR. We know that 50% of the, well, we know that a lot of the time propulsion gaps get, if they get retested and not filled, they test 50%. A lot of the time that happens. You'll be surprised if you watch, especially big ones, because obviously there's a lot more selling volume in there. So with that one, if there's a lot of sellers sitting in there, we might find that it gets sold again. If it gets sold again, it's not going to fill the gap. So I will take my profit when I think they might get in. If it goes up to there, fine. What's the difference between that and that? I don't know, and I don't care. That's profit. That's profit. Whatever it is what it is. Don't think about it. Don't overanalyze. Just take it. Take money. Money, you can spend it. Open P&L, you can't. Can you please show me which setting the EA does this part? So it's still covered in the video and in the manual. Yeah, if you go to the website and go to the EAs, There's a video on here which explains everything. That one. I'll put it in the chat. But basically, if you use any of my set files, all of my set files use a percentage risk based on ADR. Yeah. So it's this here. It's the percentage of balance to risk. Lot sizing is set to %. So I'm risking a % of my account. The percentage is 0.1. Stop loss mode is ADR. Yeah. Use stop loss set to true. And the ADR stop loss setting is 0.5. So that's the stop loss ADR multiplier is half an ADR. So I'm going in the market. We're measuring half an ADR away from our entry. And that is where we're placing our stop loss. That amount of distance, I want to risk 0.1% of my account. So what it does is it calculates what 0.1% of your account is. In this case, it's a 50K account. 0.1% is $50. So basically, that's what it calculates. Yep. So that stop loss becomes $50. It then places the trade, removes the stop loss because we don't use stop losses in position trading. And that is done using this setting down here. Use fake stop loss to calculate lot sizing, set to true. So basically, that's how it works. So it calculates it, places the trade, immediately removes the stop. And then from that moment on, if price pushes against me and it moves more than 3/4 of an ADR, i.e. beyond my initial risk, and then we get a reversal alert, it takes the second entry, and that second entry for me, and again, this isn't up to you how you do it, but for me, I multiply the initial lot size by 1.3. So if I was taking a 0.1 long, the second entry would be 0.13. Yeah. And then the third entry would be 0.15 or 6 or something, whatever 1.3 of that is. So it's a incremental lot multiplier. Because when we get into the trade, the market is extended, remember, because RSI has pushed. Yeah. If it pushes even further, that's even more extended. So the chances of the pullback are much higher. If it pushes even further off the chart, we're even more extended. So by incrementing your lot size ever so slightly, what you're doing is instead of when you take position 1 and position 2, having your average there, equidistant between the two, what you're doing is your average will be ever so slightly closer to price, giving you that easy out because your trade was wrong. Yeah. Don't forget, position trading is not about trying to make more money by having more positions on. It's about trying to get out of positions which didn't work. We were expecting that to go up. It didn't. We need to get out of the position without making a loss, not out of the position with a huge profit. We will make a profit, but the idea is not to make a fortune. The idea is to get out with a profit. I'm not looking on this euro US dollar to make a fortune. I'm looking to get out with a profit. Anything that gets to 0.25%, I'm thinking, get ready to take it. Because I'm risking 0.1% on a trade, on a position, on a trade initially. Yeah. So when we start getting to 0.25, I'm looking to bank it. Sometimes I might bank it faster, like I did this morning, because I just didn't like the look of it anymore. Again, discretionary, just through. And look how wrong you can be. My exit there was discretionary. Why did I get out there? Because there was a propulsion gap. I was expecting them to retest it. That was where my target was, and I saw price stalling, so I got out. Same as I did with the Aussie dollar yen this morning. How wrong was I? Do I care? No, because the trade was successful. It could have been more successful, but neither you nor I could ever know whether that thing was going to go down from there or up from there. So I took the money and I put it in my bank account. Aussie dollar yen this morning, I got out because there's a propulsion gap. My target was there. It looked like it was rejecting. So I got out. Why? Because I can bank some money. Was I right? No. Where's it going now? There or there. And I can tell you that with a 90% certainty. But what it might do is come back down to here first before it goes up there. I have no clue. But what I do know is when I've got $100, I can stick it in my bank. And if I can bank 1/4 to 0.5% a day, I'm returning a 5 to 10% return on my account a month, every month. It's all about banking often and banking small, not going for the home run, because the home run is very hard to achieve. The home run is going to need to be off the top of that chart somewhere. It might get there next week, next month. It might get there in 48 hours. It might never get there. If you don't go for the home runs and you go for the small wins and you bank often, you will build up a pot of cash over a period of time. Your job is not to make 500 pips. Your job is to make a small percentage on your account as often as possible so that you're a profitable trader. That's it. Your job is to return an investment. I put 50K in here. I want at least 75 out of it by the end of the year. My goal. To do that, I'm going to need to bank 10 to 15% a month on average. What's the difference between ADR and ATR? The D. ATR is the average true range. ADR is the average daily range. So if you're looking at an hourly chart, the ATR 10 is that one, 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 and that one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 is basically all the candles today. It's the average true range of the last X candles. ADR is the average true range of the last 10 days. That's all it is. So basically, ADR is ATR on the daily chart. It just measures the average true range of the instrument on a daily basis. The reason we use ATR is because every instrument is different. So if you're going to go long on the Aussie dollar yen now, and target 10 or 15 pips, for example, let's say, for example, we're going to target 20 pips. ADR on this is 87. So you're targeting roughly 20% of the daily move of this instrument. Yeah. If you're going for 20 pips. Yeah. If you were going to target 20 pips on the euro pound, the ADR on that is 39. So 20 pips on euro pound is 50% of its average daily range. Which is why you can never, ever use pips as a target. You can only use a percentage of ADR as a target criteria because the movement on every instrument is different. So if you don't know what the average movement is on an instrument, how can you target pips? This is why we laugh about Helpy FX that come in here. Helpy FX come in and they say, we return on average 427 pips a month. Do you? Okay, so 420 pips a month, I can achieve that on the US dollar ZAR in about 5 minutes because that thing moves thousands and thousands of pips an hour. So if you're telling me you can return me 427 pips a month, that's great. I can do that in 2 minutes. I just got to trade the ZAR. Does that make you good or bad? You can't measure it. It's an impossible measurement. But anybody that uses pips in any training course or any video you ever look at, immediately shut it and walk away because pips are useless. They're a measurement of distance on a chart, which is different on every single instrument. 10 pips on oil is half an ADR. Only moves 20 a day. Yeah. On the pound yen, which moves 194 a day, it's less than 0.5%. So this is why we use ADR. Price stays within the average daily range of its instrument, of its movement, 58% of the time. So if you are going to measure ADR, it's got to be unique on every instrument. So if we know that price stays within ADR 58% of the time, when it gets outside of its average daily range, what is it? Extended. What's that a good opportunity for? I mean, reversion trade. So if we monitor things that move outside of their range, there's a good chance they'll pull back into it because this is what these ADR measurements are. It only gets above 125, 23% of the time. It only gets above 150, 12% of the time, etc., etc. So if you get to 150 ADR, you know there's only a 12% chance it's going to go further. What's that give you? An 88% edge that it's going to go short. But that is different on every instrument. Yeah. 100 ADR is 87 on that one. It's 141 on that one. It's 194 on that one. 52 on that one. Yeah. So you've got to use percentages, which is why the Market Reversal Alerts EA risks a percentage of your account on a percentage of movement of the instrument, because it's going to be different. And that's why you get different lot sizing. What's the indicator set up on H1 chart? There's lots, Mumo. Watch the bootcamp. I get it. I always say it, but I'll say it again. Everything I talk about, everything I show you in here, and I've been doing for years in here, it's all covered in here. Every strategy I use, every indicator I use, everything I use is here. All the indicators I use for position trading, all explained in day 3. All the strategies I trade, all explained in day 5. Everything that the EA executes is all based on all of this. Everything I do is based on everything in this bootcamp. Watch it. It's 12 hours long. Answers every question. And then if you've got questions, fire away. From your experience, what's the maximum drawdown you've seen based on your settings? I don't know. I haven't got any settings, have I? Put it in the back tester. Pound yen ADR. The maximum drawdown on me is my settings in my head, because I don't use I've just spent probably an hour explaining that I use the EA for automation to get me in and I'm discretionary exiting. So there aren't any settings, are there? But if you put it in the back tester, you'll see what the maximum drawdown is. I don't know. And it depends what time period. So if you test it over 6 months, the last 6 months, you'll get a different drawdown to the 6 months before. If you test the 2 years before that, you'll get another different drawdown. And depending on whether or not you press the close button at half an ADR or a third of an ADR, you'll get a different drawdown again. There's 10,000 settings in the EA. It's not for sitting on a beach drinking Mai Tais, because you can't do that, as I said. And I say in here every day. Euro US dollar. That is rallying at the moment. We're just broken out the high. Or testing the high anyway. So this area here that we pushed up into and retested yesterday is being retested again. There's your reverse alert and your retest, your W pattern. It's going long at the moment. 1:15 and 1:30 this afternoon. We've got 2 news events affecting the US dollar. If they both come out negative, we'll be up here. Or up here. Or I don't know, we'll be up, won't we? So I'm getting out here anyway, because I would love to be out in the next hour. If we can get out by 1:15, that'd be lovely, because we could double top this, just move into a range. But if it breaks that level, we'll probably get a little push through, and then we'll get some sell orders, push us back, and then push up. But that will either be dependent on whether that is bullish or bearish today. Euro yen. ADR hit, Euro yen. So again, you got nice area support coming up at the highs, 175 ADR. So if it gets up to there, lovely short. But could do that, could do that. I can only ever give you what somebody said to me over Christmas. Why do you never give? No, they didn't actually say that. They said, I've noticed that you never give what you think is going to happen. You give what could happen all the time. Why don't you say what you think is going to happen? Because I don't know, which has probably become very clear this morning. I don't know what's going to happen. Everything you see me doing here is always, it's going to do that, or it's going to do that. Where's it going from there? So it's an ADR extension, which would indicate that we're likely to have a pullback. However, if it does decide to rally further, it's probably going to go to 175 ADR before it does it.
If it comes from there, it's probably going to come back and either retest that level or come back down and retest this propulsion gap. That is all I know. That's what I think is going to happen on the US dollar yen. Come back on Monday and see which of them has played out. One of them will. I don't know which. But if you go short here, you get out. If you go short and it doesn't, you enter again and you get out. That's what I would do. Drop down M5, wait for the reversal alert, which is far away. Look at it. It's miles away, isn't it? So by the time, this is the other thing about the reversal alerts. And this is, again, why I say, the EA can be used for automation, but you need to do analysis. Is that a good short? No. Because by the time you get that reversal alert, you've moved a quarter of an ADR. You've lost a quarter of the average daily movement of the entire instrument. It's already done what we were expecting it to do. And it's going to hit that level of resistance, probably, and turn into support again. So is that a good reversal alert to take? No. Will it work? No idea. It could come through that, hit that, bounce there, and push down. It could do the opposite. That's all I know. Two things are going to happen. It's going to go up or down, and it's going to move through time. That's all you can fathom from any market. But that's where I see it at the moment. But it's a good short at the moment because it's extended, as it was yesterday. Look, so yesterday we had 162, 141 ADR. So that was around about a 125 ADR hit yesterday, and we got a 50% pullback. Just under 125 ADR today. Either that or that. If it pulls back. If it doesn't, short it up there. Make sense? Would you recommend using this EA on a prop firm that allows EAs? If you want to, yeah. Which one? Which EA? I've got 3. I've got 4. You're asking questions, Empowerment TV, as if I know the answer. Should I use this EA on a prop firm? Yes, if the market conditions when you take your evaluation are conducive to the settings of the EA that you're using. If, when you take your evaluation, the settings you're using on the EA are not conducive to the market conditions, it will fail. Whether or not you pass or fail an evaluation has nothing to do with the strategy, nothing to do with the EA, 100% to do with the market conditions when the buy and the sell button are pressed. Yep. I'll use ADR as an example of why none of my indicators work, and yet all of my indicators work. We know that there is a 23% chance of hitting 125 ADR, the market pushing back. Only 23% of the time does it go forward beyond there. If you set the market reversal alert EA up on a prop firm today, and this hit 125 ADR and did that, and then pushed up and stopped you out because you had to stop a quarter of an ADR away, that trade fails. If tomorrow or yesterday, for example, you had done exactly the same thing, it would have worked. What's the difference between today and yesterday? A day. Has anything changed in the market that would indicate that that 23% chance is different? No. So the question you should ask is, when I start my evaluation, how many times will it exceed 125 ADR and stop me out? If I'm risking 1% of my account, will it happen 10 times in a row? If yes, I will fail. If no, I will do something else. Not talking about my EA. I'm not talking about Gold EA or Joe Blogg's EA or any EA. Every single strategy and trade taken on every single terminal on the planet has the same odds. I can't tell you the answer to that question. Yes, it will work on an EA, on a prop firm that allows EAs. Will it pass your evaluation? I have no idea, because it doesn't have anything to do with the EA, because the EA doesn't control the market. The market moves up and down. You program the EA to get in on a set of conditions which will or will not prove profitable for you on that day. Yeah. I can't be any clearer. You're not in control of the market. The market moves. So if you go watch this video, yeah, you'll understand why that is a silly question. I'm not saying, I'm not having a go at you about saying it's a silly question. It's just a silly question because there is no answer to it. There is a 50-50 chance of this dropping from that level. Regardless of that 23%, there is still a 50-50 chance right now today. So this is where everybody goes wrong with trading, yeah? If you are going to get into the market with a short position here and you're going to put a stop a quarter of an ADR away, it will hit that and then it will come down to here. Why did that trade fail? Because you placed that order. If you hadn't have placed that order, that trade would have worked. Yeah. So the question you should be answering is, will I exceed a 5% drawdown on any given day? Again, I don't know what the market conditions are going to present to you. If you start an evaluation today and you start another evaluation tomorrow and you start another evaluation on Tuesday next week and you use exactly the same strategy on those three accounts with exactly the same settings on exactly the same EA, you will get completely different results on every single one of those accounts. Because it depends which day you start as to what the market does. Which is why I position trade, because I have no clue what the market's going to do. New Zealand dollar yen is ADR extended as well now. It's another extension on the ADR. Sorry. Pound yen is extended beyond 125 now. So, beyond 75 again. I'm already in this short, obviously. So second entry will be going in today. We're 150 on a 194. So I should be getting second entry on that. It's going to be tight. Euro yen 125. This yen's really melting, isn't it? So I shouldn't have got out of that Aussie yen. Still pushing. That's come off of ADR nicely. So yeah, I don't know. Same with the stock index hedge. This week, the stock index hedge EA has milked it. Absolutely brilliant. What will it do next week? I don't know. We've had weeks where it hasn't made any money. We've had weeks where it's made 15, 20%. This week so far, it's up. Probably I'm up about 5% in 3 days. Not down to me. It's down to whether or not, when this market opens, it clean breaks. This strategy, the stock index hedge strategy, the reason this makes or doesn't make money is based on whether or not the initial cash balance is strong. I can't control the initial cash balance of the stock indexes. Yeah, but the edge I've tested tells me that more often than not, the initial cash balance on the stock indexes is strong enough to get you to a 2R result, as demonstrated perfectly today by the EA. But that isn't demonstrated exactly the same every day, is it? Yesterday, the DAX got hedged. The day before, the DAX got hedged. Today, we got a clean break. I got out of both of those hedges previously because it uses a loss recovery strategy that gets you out. Whether or not that loss recovery strategy works or not is dependent on what happens later on in the market. Every single day is different. There is no 2 days that replicate themselves, which is why backtesting is absolutely no use. I can show you backtests for all of my products, but that has nothing to do with what's happening in the future, because what's happened in the past is never going to replicate itself, because there's no 2 days where the candlesticks paint the same. So therefore, all your backtesting is just what would have happened, which is why I was saying earlier, with my backtest results from the hedging strategy that I'm developing, I'm not looking for what's profitable. This is the most profitable setting for the EA. Yeah, but that's not the one to use. The one to use is the one that makes profit more often. What is better to use as a hedge distance? When is it better to start triggering that trailing stop? How much of the other hedge should I be closing? If there's a continuity across all instruments that produces a profit overall, that gives me robustness. But I cannot tell whether any of these will be profitable in the future, because the situation tested here over this 6-month period is never going to happen again. which is why you need to watch the market and be aware of what's going on. Sorry, I'm being really woolly this morning, aren't I? But that's what it is. That's real life. This is trading. There's no exact science involved in this thing. I highly suggest everyone who has not watched the bootcamp to watch it. It's one of the best Forex videos I've watched. One of. Also gained a lot of knowledge from it. That's the idea. But if you're going to trade on prop, if you're going to, with the market reversal alerts EA, it was built for position trading. You can use a stop loss with it, and there's lots of stop loss based strategies with the market reversal alerts indicator that will trade. But it's built and designed really for position trading. So on prop, the problem you've got is drawdown. You can't control the drawdown, and you have a limit on the drawdown. So if you're going to use prop, I would go with the stock index hedge EA or the opening range breakout EA, because it's an intraday strategy. And you will be able to use higher risk to pass the evaluation faster. But again, it's up to you how you want to trade. Everybody's different. Some people like hedging. Some people like using stops. Some people like position trading. There's not a lot else you can do, really. You either hedge the market, you stop out of the market, or you wait for the market to move your way. There's only three things you can do. It only does three things. Makes you profitable, sits around for ages, or loses you money. That's it, isn't it? Binary, really. Euro odd ADR. Euro's driving nicely today. So Euro US dollars in nice profit now. EU almost at TP. Yeah. So again, discretionary here. So it's almost at TP. I've got 0.2% I can bank now. I've already banked 0.15 today. So right now I can shut that and go 0.35 for the day. Happy with that. Or I can let it run. That's the discretionary part of it. What do you do? Everybody's going to do something different, aren't they? This thing could scream up in the next hour, as it has done for the last 3 hours, 4 hours. And it could do this for the rest of the day, especially if that news comes out negative for the US later, in which case then I don't really want my TP there. I want it up here somewhere. So again, what else you could do is move your TPs up, stick a trailing stop on it. Yes, you'll take less if it drops, but these are the decisions you have to make. This propulsion area, we know, is a large bank order where they sold the crap out of it and continued to rally. And then the buyers tried to take control back and they said, no, we're short. So we know there's highly likely there's going to be resistance sitting in this area. But what we don't know is today, are there more buyers than sellers in the market? Again, this is why yesterday has nothing to do with today. Yesterday, Barclays executed a massive short order on the euro US dollar for Microsoft. That's why it went down. Today, Tesla phoned up and said, can you buy the crap out of euro US dollar? Because we're shipping a load of parts from Europe over to the US. This is going up. Nothing to do with yesterday, because Tesla yesterday didn't want to place the order. Today they did. So Barclays have had to execute a large long order. This has got nothing to do with anything on your chart. It's not technical. It's to do with fundamentals and pure volume of orders placed by banks. How many more buyers have we got today? This order they're executing at the moment, how big is it? Have they done 50% of this order? Have they done 90% of this order? Have they done 10% of this order? If they've done 10% of the order, we're going to be up at 150 ADR. If they've done 90% of the order, we might hit ADR and then drop. Again, where's the crystal ball that tells you which way that's going to happen? You don't know. I'm making all this up as speculative because I have no idea what is going on. But that's the point, isn't it? We don't. So you either take it because you're happy with it, or you risk it. So I'm going to put my TP up there because we got news. If all that news comes out as negative this afternoon, we're going to be up there, aren't we? If it all comes out as positive, I'm going to be cross. What can you do? It's the first week of the month. I'm going to be risky. I've already banked some, so I'm all right. Do you use two different capital accounts for index and FX trading? Yes, I've got 4 accounts. I've got 3 accounts, 1 FX, 2 indexes, and I've got 1 other account which is sitting on the sidelines waiting to start a new strategy this year. Always separate your strategies out into different accounts with different capital. You'll find it very difficult to know whether a strategy is working or not if you bundle everything in one account. If you trade indexes with high risk, position trade with low risk, and you take discretionary trades because the wind changed direction and you heard some bloke over there saying that Euro US dollar looks like it's going to pop, you're never going to know if you're successful or if your strategy is successful. The position trading account is the position trading account. The stock index hedge account for European indices is that. The US indices is that. Yeah, separate everything out. If you're trading position trading and you're doing 3 different position trading strategies, ADR reversals, H1M5 reversals, and you've decided you fancy having a go at CCI and Bollinger Band reversals, whatever, every single one of those strategies in a different account. Because otherwise, how are you going to know if they're working or not? Yes, you can have trade trackers that can separate them out. But everything you do should be based on a strategy. And if you ever take a trade not based on that strategy, you are not trading that strategy. Yeah, this is why I use the EA. The EA executes. You'll never see a trade in here that has not had an H1 RSI extension on it, because this account will never enter the market without an H1 RSI extension, because that is the strategy. If I want to trade because I fancy something, it gets done somewhere else, which I don't do. But if I did, that would have to have a separate account, because otherwise, how would I know if that thing that I've just invented works or not? You've got to have separation, and you've got to have diversity as well. I used to position trade only, and before that I used to scalp only. What you'll suddenly realize is that everything works to a certain degree, but it doesn't all work at the same time. So if you have 2 different strategies running, one more high aggressive risk on low time frames and one more swingy, you run both of them together, the months they both work together, take the rest of the month off. The months where one works and one doesn't, they pay for each other because they're diverse. One is a breakout strategy on 5-minute time frame. One is a mean reversion strategy on hourly swings. So I've got diversification. If you enter another strategy into the mix, which, the more variation on strategies you can have, the better. You should always have a separate account so that you can see that that thing is actually producing alpha. If it's not producing alpha, you don't want to do it, do you? Scrap it. You've got to be able to segregate. If you don't segregate, you're never going to know. And you also won't get a feel for it, will you? And the other thing about using EAs, again, stops you over trading. Yeah, I'm long on Euro US dollar twice, but my entries are spaced perfectly because the EA measures this. I, on the other hand, will go, I'll take. Yeah, let the EA do all of this for you, because the biggest problems people have with drawdown is when they enter their positions too close together. You get too close together, you will get into drawdown too fast. If you get into drawdown too fast and the market squeezes, you're going to be in big trouble. The EA will not do that because it literally can't. If it's 1 pip shy of where you've said take a second position, it won't take it. Which is why I'm kind of watching what's going on with this pound at the moment, because this reversal alert here is, I do want to get into another one on this. That's only 80 pips away. It's less than half an ADR, but price at the moment is 3/4 of an ADR. So I might actually just take a manual on this. So I'm just taking a manual just because I'm not going to get in on the reversal alert on this. The EA is, by the time the EA triggers, that will be below half an ADR. So it's too close to that initial entry. So I'm just taking a manual one on this. And again, this is stuff you're going to have to do because, nothing's perfect. So Average is now there. There's a potential bounce point there and there. We know that is a good bounce point because it's already done it twice. So that is probably not a bad place to target for an exit to get me out of that one. So on the hourly, what I'm looking for is that area there. So somewhere in that area to exit. So it's either that propulsion gap or that propulsion gap are potential areas that we're going to test. Could come up and test that, come back down again. Got this area as well to worry about, this area. There's so many areas at the moment on this one because it's range bound. But we're approaching top of range. So if we're going to put in a lower high, we're not going to exceed that. And obviously I'm waiting for that yen to power up a little bit. So there you go. Quite a long session this morning. I've been waffling, haven't I? I was going, wasn't I? About an hour and a half ago. And I didn't. So I'm going now because I've got other stuff to do. I need to go and have a shower as well. So I'll be back this afternoon at 2:20 for the New York session. Back tomorrow morning, 7:50 for Frankfurt. DAX is all done. FTSE's all done. So I haven't got to worry about any of that. That's all finished for the day. And we'll come back and trade the US this afternoon. Just be aware of the news at 1:15 and 1:30 this afternoon. Your US pairs will all be potentially affected. Anything you need, I'll be in Telegram. There's already 17 messages in there to deal with as well. So I'll be in there if you need me. Otherwise, I'll be back 2:20 this afternoon. And if you're not around this afternoon, tomorrow morning. All right. Have a good day. Hopefully it's profitable. And I will see you guys next session. Have a good one.